Talk about earnings. DB Corp, that one posted a weakish set of fourth quarter earnings. The EBITDA and the net profit both came in below street estimates. Margins declined for the company for this quarter. Girish Agarwaal, the promoter and director of DB Corp, joins us now. Thanks a lot, Girish, for joining in. First up, your margins, they declined by over 300 basis points. Cost of materials, they increased by about 22.5% as well. Do you think this trend is likely to continue? Newsprint prices, raw material prices, are they going to trend higher? And in that light, what kind of margins can you guide for in FY19 rather?
Let me first explain you, this margin which has come down is not because of the newsprint prices alone went up. It's because we decided to expand our circulation base. If you look at the YOY trend, our circulation is up by almost 8-9 lakh copies. So our expansion in the market of Bihar, Gujarat and Rajasthan has resulted benefit for us in terms of circulation over there in those markets. And because of that, the newsprint cost has gone up. So part cost has gone up because of the price. For example, 4% is the year-on-year cost increase in the price increase in the newsprint. But balance all increase because I'm doing more investment in the market.
Okay. Hi, Mr. Agarwal. Good afternoon. Thanks very much for joining in. In terms of FY19 now, what is the expectations, especially given the heightened activity around elections, etc.? I mean, how might that translate into earnings?
So if you look at this quarter, top line has grown by 11%, out of which 9% is the advertising revenue growth. So we are very bullish that if this continues like this, then we'll see a lot of improvement happening in the bottom line also. Because, and there's a fact that newsprint prices have gone up, so we'll have to consider that also. But apart from that, the most important point is to look at my EBITDA margin for the mature markets is 24%. Though the overall EBITDA margin for the print is 19% because of the expansion in Bihar and Gujarat. If I take that out for a minute, then we are at 24% EBITDA margin, which is pretty healthy.
Right. How long before you will see a recovery there as well, and what kind of margins do you expect coming in from the increased operations that you've made into the new geographies, and going forward, what sort of incremental revenue do you expect from there?
So our experience of the past says it takes anything from 12 months to 36 months for a desired result to come from those markets. So Bihar is that market where today we are at almost 7 lakh copies in that market. So we hope that in next year or two, we'll get the desired result from Bihar coming in. But most importantly, see, this is a time when the entire market is kind of stuck with the newsprint cost and nobody is increasing any circulation. So we took a call that this is a time when we must go out and gain the dominant position in the market where we still have some headroom to grow.
What about the expectations from the radio business, in terms of update on ad and inventory? How could phase 3 help?
So radio this quarter has grown up by almost 7%, 9%. But I think radio still have a long way to go. I'm not very happy with the performance of radio for this quarter. We are evaluating that what has happened, the new licenses have come in various territories. Like Chandigarh was 2 licenses earlier, now it's 4-player market. So there has been some market share taken away because of that. But we are still working on it and we are confident that in a couple of quarters more, we should be able to get that grip back in radio also.
All right, and before we let you go, Girish, just keep it simple for all the viewers who are watching. What kind of ad revenue growth do you expect for FY19, as well as what kind of subscription revenue do you expect?
So circulation revenue will be in a single digit, but in case of advertising, I think we all are hoping that it should move on to a double-digit growth.
All right, Mr. Agarwal, we'll leave it at that for now. Thanks very much for your time and all the very best for the coming financial. That's the word coming in from DB Corp. Let's also hear out the manager.